All right. So on today's shows, we will review last week. Markets had a pretty volatile week last week. In Finance and Focus, we'll talk about everybody in the world was in China last week. And finally, since tax season has ended, we'll chat a little bit about your tax return and its financial health. I'll get us started here. So last week, the markets were mixed a little bit as this hot inflation data kind of weighed on the sentiment and offset the strength that the chip makers had driven up last week, the week before, I should say. So let's see. Last week, the S&P 500 was up 0.13%. NASDAQ was down, though, 0.08%. The Dow was down 0.17%. And overseas, we were down 1.77%. So, and that kind of reflected a little bit of the broader weakness in the developed international markets. And I'll kind of get off base here. That's one reason why when we're investing using portfolios, a lot of times we will pull money back from overseas just because of the risk factor. We're able to control clients' risk so much better when the money's over here in the U.S. And as you can see, the overseas market, I mean, it was down 1.6% more than the Dow and NASDAQ, and almost 2 percentage points more than the S&P 500. So you can kind of see where that risk management hedge comes into play there. So Jeffrey, kind of lead us through what that week looked like
Yeah,
last week.
and hmm and it opened up strong. I mean, the S&P 500 was above 7,400 for the first time. And then we had the Nasdaq that also set a new high, including the chip maker momentum, which was big. So, and then we kind of get into Tuesday. The CPI report came out, and it put some pressure on the markets early. And the stocks recovered by the close, and the Dow managed to get a little small gain in there, even through the hot CPI report. So. Midweek, we rallied a lot and lifted the S&P and the Nasdaq to new intraday and closing records. And then Thursday, we saw additional gains fueled by strong Q1 mega cap tech earnings report and attention on the U.S. Chinese meeting. And then kind of the S&P closed above 7,500 and the Dow reclaimed 50,000, which was big. So Friday opened up with broad selling as Treasury yields climbed and investors reacted to the U.S. China summit, ending without major Middle East agreement. So a lot going on this week and pretty volatile, but it's still some positive to take away from it. So
Yep, absolutely, absolutely. And for those of you who are joining us on our YouTube channel, you can actually we'll put up the charts this week too. So we'll try and continue to do that to have a visual to help kind of go through what we're seeing there. All right, so let's get into some key economic data for the week. Tuesday, we've got pending home sales. We've got some remarks coming from the Philadelphia Fed President, Anna Paulson. I think Anna's been there for a little while. So
pretty nice.
so she should have some good insight there. On Wednesday, we'll get the actual minutes from the Fed's May meeting. Thursday, we get weekly jobless claims. We get housing starts. We get the building permits, and some PMI from both services and manufacturing. Friday, seems like we get this every Friday almost. Consumer sentiment, and they'll go through the leading economic indicators that are kind of fueling the economy. And let's see who we got reporting this week. Home Depot, Nvidia, Analog Devices, TJX, which is like TJ Maxx and all those companies. Lowe's and Intuit on Wednesday. Thursday we get Walmart and the John Deere Company. And so
The
that
big
will kind of,
guns.
yep, got some big guns. So Nvidia is going to be big. It's
Mhm.
coming out today. So that'll really tell us where a lot of tech is going. Tips and all that fun stuff. Analog Devices is too. Will fuel that information. So, yep. So that's kind of our markets in motion this week. And on the other side of the break, we'll come back with financing focus.
And we're going to start talking about the Trump and G summit, as well with the U.S. and China relations on top of that. So the Trump and G summit ends, excuse me, amicably struggling to say that word this morning. It wanted to come out, but it got stuck there a little bit.
Mhm.
But delivered no major. It didn't deliver any major breakthroughs. The U.S. kind of highlighted China's commitment to increase agricultural purchases through chip controls and rare earth export delays. Kind of remain involved in that area. And then Boeing shares fall as the summit failed to produce substantial commercial deals. Nvidia's China prospects remain uncertain as Chinese firms pivot towards domestic chip makers. And then the White House says Trump and Xi agreed to form a board of trade to promote stability. And then China agreed to purchase at least 17 billion. So yes, that's with a B in U.S. farm goods annually, which is big. So.
Yeah, so yeah, they were touting a couple of the trade deals there, and I think the Boeing
Hmm.
impact, like you mentioned, wasn't as pronounced as they thought it would be. So
Yeah.
yep, so interesting there. Um all right. So let's see. So let's talk a little bit about the Iran conflict and those geopolitical tensions that are still there. So Trump says US and China do have the common goal of trying to resolve this war. Um, though there are risk of renewed military action remain. I think on Tuesday the conversation was that he was going to hold off on striking
Hmm.
to allies, asking them to. Um, Trump suggested uranium recovery missions may be unnecessary given the continuous U.S. surveillance. So we're paying attention to that uranium over there. UAE sought to coordinate the military action with Saudi Arabia and Qatar, but faced refusal, according to some sources. And before issuing his latest warning, Trump met with national security officials to discuss the future Iran strategy. Trump stresses the urgency for Iran to negotiate, believing Tehran wants a deal, but warns of action otherwise. But we're getting a delay right now. And the U.S. war with Iran has cost global companies over $25 billion, and that number continues to rise.
Yeah. And it doesn't seem like it's going to slow down anytime soon, unfortunately. So,
Uh-uh.
uh, and then we kind of get into the energy markets and global supply pressures. Global oil inventories are rapidly depleting due to the Iran conflict, raising safety net concerns. And then UAE plans to double crude export capacity by 2027, reducing the reliance on the Strait of Hormuz. Trump says G is open to buying more U.S. energy, potentially easing some supply strains. But Trump allies hope G can stabilize the Strait of Hormuz crisis. Americans have spent over 40 billion extra on fuel since the Iran war began, testing household budgets. I know we're all seeing the gas prices out there right now. And the global demand for U.S. energy keeps domestic prices elevated as overseas buyers drain inventory. Global energy crisis nears a tipping point as AD countries implement emergency measures. And then China's crude imports plunge forward, forcing refiners to cut output to multi-year lows. So, not
Yep.
going
So a
on
lot.
there.
Yep. A lot going on there, kind of disrupting. And again, all that kind of points to where we just led off from at the top about that international market, and you can kind of
Hmm.
see why getting hit a little bit. All right, so let's look at what's going on corporate wise. Applied Materials, guys, revenue and profit above expectations. So that's semiconductor equipment demand is still there. Samsung Electronics shares fall as its labor union remains committed to a strike next week. So that's big. The largest Papa John's franchise joins Earth Capital's bid to take the company private. So that'd be interesting if Papa John's goes private. And then here's something. This stuff always irks me. As our commitment to our clients personally is, I don't shy away from using, the top software, regardless of its cost, because it brings value to what we add to our clients. But
Hmm.
here again, this is how profits take over. So Apple's Neo laptop benefits from using lower performing, imperfect chips to boost margins. And that's just where we are. So with
Hmm.
that, Jeffrey head right on into the AI and technology developments that maybe are more positive than what we're seeing
Yeah,
coming from Apple.
exactly. Exactly. A lot of people don't realize that when they see that low price tag on these new laptops that Apple puts out, that would come along with that. So,
Before you get started, so
hmm.
we've been using this software and it's, had its little challenges here and there. So I'm reading up on it. Like, All right. So what do I need? Chip wise, what do I need RAM wise, yada yada yada.
Hmm.
Usually you could go to Home Depot and I mean not Home Depot, Staples, and get kind of a lower end, you know, tower or laptop, like you just said. Um, but now I'm not seeing those lower prices anymore. I'm seeing like that HP one that they suggest. I forget it's a 16 gig RAM. I forget the chip that's in it, but it's
Hmm.
like 579, 599. So you're not seeing those $200 and $300 Asuses anymore and stuff like that.
Mm-mm.
But anyway, head on into AI. Oh yeah, this is gonna be good because the open AI. We're gonna talk a little bit about that. And that trial
Yep.
ended yesterday.
Yeah. So, like Marcus said, OpenAI may pursue legal action against Apple over an alleged breach of contract tied to the ChatGPT integration deal. The OpenAI CFO says the company may raise additional capital after its largest funding round yet. And then big tech companies are borrowing heavily to fund AI expansion, led by Alphabet and Amazon. And then Elon Musk is planning to return or did return to Texas to prepare for SpaceX's historic IPO, which is closely tied to AI and then aerospace ambitions. So a lot happening on the AI side that's kind of going to define the very near future of which companies are going to be the big leaders in that world. So,
Yeah, absolutely, absolutely. And then like I said, I know on Monday, gosh, that suit he had against
hmm
OpenAI ended pretty quickly. That must.
yeah,
I think the jury on deliberated like 2 hours. They were like, "Nah, bro." So
yeah, yeah. And ain't much for us to talk about back here.
ain't much else to talk about. I think the judge is even trying to shut down the appeals process. So
Yeah.
that didn't go too well. But anyway. All right. So let's see. Central banks and monetary policy. New York Fed President Williams sees no need to change rates yet, preferring to monitor inflation. Makes sense. Fed's bar pushes back on easing liquidity rules, warning it could increase financial system risk. Okay, that makes sense. I agree with that. Um,
Mhm.
Trump even suggests waiting for the Iran war to end before considering further rate cuts. Hmm. Kevin Warsh, our new Fed leader, inherits a very complicated U.S. economy as the data challenges his desire for lower rates. So he wants lower rates, but the data again just does not warrant it. I can't go against the data. Um, uh, Deputy Governor Breeden warns against this rapid rate change as well, because that due to the business uncertainty that we have, and the global yield sharply rise as war-driven inflation pressures central banks toward higher for longer policy. So again, the longer this draws out, we just got to keep these rates up until we can get some certainty on what's going to happen. And so
Mhm.
then take that from the as I said, we sticking to China for a little bit. So just talk a little bit more, Jeff, about the economy and that global data and what's going on in China, how that's impacting some things.
Yep. So China's industrial output and retail sales declined sharply in April amid geopolitical tensions. And then rising vehicle and insurance costs are making car ownership a luxury for many Americans right now. I know I know on a day to day, we kind of see that's a lot of conversation we have, Marcus, around the raising costs in that area. And then leading into straight mortgage costs surge across North America and Europe due to the Middle East conflict. Um, and the inflation around that conflict. And then China's home prices as well declined at the slowest pace in a year, hinting at stabilization but uneven recovery, which is interesting. So, but we still got some good news. A share of consumers expecting to miss a minimum debt payment in the next 3 months hits its lowest level in years, signaling easing some of that financial stress that we've all been going through lately. So, some good
Yeah,
news to end that.
yeah, absolutely. And as you mentioned, we're here local in the prime of the Raleigh Durham market. For
Hmm.
those who may be viewing from outside, and one of the newscasts, Deborah Ariel, was on either
Hmm.
late last week or early this week talking about vehicle insurance costs. So
Yep.
that's everybody's kind of feeling that. All right, so that'll wrap up Finance in Focus this week, and we'll be back on the other side of the break with the Wealth Wisdom Workshop. And this week we're talking about your taxes and the return and how it tells about your financial health. So join us on the other side of the break. All right, welcome back everyone to the Wealth Wisdom Workshop. Today we're tackling a topic that most people avoid: your tax return.
Hmm. Yep, most people send documents to a tax pro, sign a return, and then never look at it again. But your tax return is really a gold mine of financial insight. So,
Yeah, so most tax software, if you look at the documents that come back from your professional, they'll show a year-over-year comparison worksheet so you can see what went up, what went down. And again, that comparison reveals patterns, opportunities, and some blind spots.
hmm and so today we'll walk you through the key areas of your return, and that can strengthen your financial plan if you know how to read them. So to get us started, well, we'll talk about what's your income, and that's what's coming in, and then how you're using that income. So your W-2 income and retirement contributions are the biggest piece. Review how much you contributed to your workplace retirement plan. Did you increase your contributions from last year? Are you maxing out, or could you push a little bit more? And should contributions be traditional, pre-tax, or Roth? Those are all big talking points, especially when it comes to retirement planning. Understanding how much money you're putting into that retirement plan and how much money you're taking home for immediate use as well is important. So then we got taxable interest. If you reported no taxable interest, your savings may be sitting in a low yield account. Consider moving that cash to a high yield savings account and letting some of that money work for you at a solid interest rate. So take advantage of these accounts. Then we have your investments accounts. Review your gains from your non-retirement accounts. Identify whether your sales were short-term or long-term. And then short-term, of course, going to be taxed as ordinary income compared to long-term, which is taxed at your capital gains rate, which is an important piece of information to know when you're doing some tax planning. And then long-term gains are generally more tax efficient. Um, so let that money sit for a little bit, hold it, and then reap the benefits a little bit later. And then you got your rental property or business income. Is a property or business profitable? Are profits growing year over year? Are expenses reasonable? And if profitable, are you making solid retirement contributions? Are you planning for the future? Your income section simply tells a story and is worth reading. I think that's the biggest piece.
Yeah, and like I said, that story often reveals some opportunities you didn't know you had, as you
Hmm.
pointed out there. So the next section, we'll look at the income adjustments and deductions. So there's the two big parts of your return: what came in, and how it went back out the door, and what were you able to deduct. So as we've preached for a while now, that health savings account. So payroll versus outside payroll contributions, both can be deductible. But how are you using the HSA? Are you actually spending it like a debit card or paying out of pocket and investing the HSA for retirement? So you don't have to use that HSA. That money can grow tax deferred, come out tax free down the road. So maybe your copay, just go ahead and pay for it. The prescriptions, just go ahead and pay for them today because it's going to benefit you down the road because that money is growing. If you're over 50, confirm you're doing some catch up contributions in that 401k. If you've maxed it out, you can go further. Charitable contributions, did you include your giving on your return? Well, that's gotten a little tricky with the tax law change in 2017 when the standard deduction went higher, and you've got people doing things like bunching their giving in order to get over that standard deduction from one year to another. But those are all strategies you need to talk about. Calculate your giving as a percentage of your income. Consider donating appreciated stock instead of cash. That's much more tax efficient way to take advantage of those contributions. IRA contributions. Did you make deductible IRA or self employed plan contributions? If you contributed to a traditional IRA but can't deduct it, make sure you're documenting that on that Form 8606 to avoid double taxation down the road. Get that on file with the IRS so they don't penalize you. The IRA contributions can usually be made up to the tax filing deadline. And don't forget, if you got a non-working spouse, the spousal IRA rules allow a non-earning spouse to contribute if income is sufficient. 529 contributions are not deductible federally, but many states offer tax benefits. North Carolina, they used to be, I want to say back 2013, 14, that time frame, we could deduct them. And some states allow prior year contributions until April 15th. So again, the summary here from this income adjustments and deductions, your deductions actually show how efficiently you're using the tax code.
And that efficient part is key because efficiency is a cornerstone of long-term financial success. So, efficiency is the key. And kind of to group all of this together and why it matters. Your tax return is going to reveal a bunch of things for you. It's going to reveal how you're saving, how you're investing, how you're spending, how you're giving, and how you're planning for the future, along with where opportunities exist to improve on those things, like Marcus said. So it tells you a lot, but you got to know how to read it.
Yep. And that's why we had this session here today, because most people don't know how to interpret what they're seeing. And that's where this
Mhm.
guidance kind of comes in and helps a little bit. So, a financial professional can help you identify overlooked deductions, optimize those retirement contributions, understand your total investment tax picture, align your tax strategy with your long term goals.
Mhm. Your tax return is talking, and so an advisor helps you understand what it's saying. It's your translator for you. So,
So, yeah, just don't file it and forget it. Use your return as a roadmap.
look at the trends, look at the opportunities, look at the gaps, and then use that insight to strengthen your financial future.
Yeah. Your tax return tells you a story, and now you know how to read it.
Exactly. And so that kind of wraps us up. And until next time, stay informed, stay intentional, and keep building wealth with a purpose. And that's from Marcus and Jeffrey today.
All right, everyone. We'll see you next week. Thanks again for
Mhm.
tuning in.
Retirement doesn't mean lower taxes. In fact, for many retirees, tax pressure increases. Required minimum distributions, taxable Social Security benefits, Medicare surcharges, and rising healthcare costs all combine to create a growing tax burden over time. Longer lifespans mean more years exposed to that pressure. That's why Friar Financial builds dynamic retirement income strategies designed to manage taxes proactively so more of your money stays yours throughout retirement.